The content provided in this podcast is for informational purposes only and should not be considered as financial advice. You are solely responsible for your own trading decisions. Please note that the prices and other statistics discussed are hypothetical and may not reflect the impact of certain market factors such as liquidity, slippage, and commissions.
We're here to try something a little different, and we're going to call this the Playbook Podcast.
Okay.
We don't know if it's going to go into podcast form. We have found specifically for this playbook, there's so much that we want to talk through that calling it a playbook review isn't going to be probably true.
Right.
Because we're probably going to gravitate towards a couple other topics, including some of the things we talked about. When do you know when to change a trade?
Right.
The big picture. We talked about the potential of a cool alert, right? And a cool alert would be something like, tell me when SPY's at high of day or Q's is at high of day, what names are at low of day, right? That would be super interesting. More importantly, why do you think price is responding at this time of day? What happened before 10:15 on the chart?
Price discovery?
Price discovery.
Yeah.
It was just chop, right? It was like there was no direction, anything like that, right? Who could be causing the distinct move that we saw?
A buy program, basically longer term participants who are looking to now buy at this lower prices, because Q's had gapped down, I believe.
Yep, they had. I believe that's correct.
I should correct.
They must have gapped down. I can't remember. Yesterday was too long ago.
Yep, small
But,
gap down.
okay, yeah, I knew they had negative news. But let's talk through who is actually doing it. Yes, a buy program is a correct thing, but what sort of participant would sit there and say, we're an hour into the day, 40 minutes into the day, okay, I'm going to buy now?
Someone who was waiting to see what happened with this China news, perhaps, or
Could be China news.
Market as a whole.
Has this pattern been occurring consistently recently?
I think we have seen a decent
We've
amount
seen
of
it a
chop in the
lot,
morning.
right? We've seen it chop, trend.
Yes.
Chop, trend. And we've seen it actually in this weird, somebody called it out in their DRC. We've seen it in both directions. We've seen it uptrend and downtrend. And what trades have really, really worked the last week?
The ones that follow those trends.
Going with those trends, right? So we're leading into this really interesting discussion, which is really centered around who the hell's trading this way in the market?
Mm-hmm.
Who do you think might be trading this way?
Causing these, they're stepping in kind of not right off the open.
Yeah.
What kind of participants are doing that? Why would you do that? I'm not sure.
What time frame might you be trading off of? Probably not a 2-minute chart, right?
No, perhaps an hourly.
Maybe an hourly, right? Dr. Steenbarger, and I wish we had him on this podcast, but Dr. Steenbarger's talked about there are more and more hedge funds intraday trading.
Interesting.
Momentum intraday trading. Why are they doing that?
Because it has edge.
It has edge because it's a way for them to, there's liquidity and there's enough movement that they can be flat overnight and take away the overnight risk for the most part. Think about traders that potentially were long going into this and then got caught off guard with that gap down, right? If you don't have to take overnight risk, why would you?
Right, you just have a lower standard deviation. You have much more control if you're not putting on these positions while you can't watch them.
Correct. If your job as a big time money manager, and I mean, as good as we work to be as traders and where our firm is right now, we don't have the same asset base as some of these money managers. We also don't take outside capital at all right now. So because we don't have the same expectation that they cannot lose money.
Right.
We do not want to lose money, and we're very competitive about it. But it's very different than us not being able to lose money.
Right.
So if you cannot lose money, you can limit that by not exposing yourself to overnight risk, would you take that bet?
Absolutely.
Absolutely, right? But that would limit your ability to participate in a big fund or a big group of funds that are momentum day trading would create patterns that exist like what we're seeing, right?
Yes. So they, just like we are, just like I said, oh, AMD's straight chop. I'm not going to trade this in the first hour. I'll just wait to see what happens after price discovery happens. You now have big money movers doing
Potentially doing the
similar
same
things
thing.
in the market.
Dr. Steenberg has been talking about this for a while now.
That's very interesting.
And what we've observed on the desk is there's some cyclicality to it. There are times that they're coming in and trading that way, and there are times that they're more position trading. We've seen since, I guess, probably over the last probably 7 or 8 weeks, we saw a pretty directional move, right?
Right. Yeah. The
And
market's been trending basically.
Pretty extreme, right? So now we're in a period of what?
Consolidation.
Potential consolidation,
/
right?
pullback.
Correct. So let's say you're a money manager that did really well on that up move.
Mm-hmm.
How are you going to protect your risk? Well, you can intraday trade.
Right.
You can trade directionally. If you're not really sure if we're going to collapse or we're going to drive higher or whatever,
just control your risk. Try to capture small portions of the move during the day and take it off overnight.
Yeah.
Makes sense.
Right? It's a different way of noticing what's happening. And so if I tell you that there's a hypothesis that that's occurring, what does that mean for your trading?
That when I see, so if they're momentum trading, right, that means there's huge amounts, when things start moving, they're going to go.
They're going to keep
because
going,
the big
right?
money is, when I see a trade and I'm like, this is breaking out, there's going to be momentum here, I should enter. I don't move the market. But there are other people thinking the same thing who are now trading in the same way I am and just give those moves extra gas.
Yep. So when we observe this, and it won't be every day that this occurs, but when we observe this, it gives you the license to not have to fight in the chop. Because if you develop the skills to just make your day or your week or your month in those moves, all of a sudden you don't have to worry about the chop because you're just sitting there saying, if this move shows up, I know I'm going to get it. It's like having an easy money trade that just presents itself.
Right.
And so that's something that we've been talking about more on the desk, and we haven't talked about it much in the intern meetings and the new developing meetings because it's a concept that is, you have to find a very specific example to be able to talk about it. So that leads us into the trade, right? So all of this leads us into the trade that we're talking about. Anything that we're curious about with regard to this sort of idea?
When they're placing these orders and going with momentum, are they using different ways of submitting orders and order flow? So like we talk about institutional order flow. That's not what they're doing when they're momentum intraday trading, is it?
I would think no, because they're trading on a time frame that's closer to the time frame we trade.
So should we expect price action that looks more like the interaction between intraday traders and less so like these big money moves?
Yeah, if you're an institution and your time horizon is 6 months, you're putting on a position for 6 months and you're going to reevaluate in 6 months or 3 months, right? Let's say you had earnings and it was a day one catalyst and you've met with your investment team, you've met with your advisors, you've met with your portfolio managers, and as an institution, you've made a decision about what you're going to do based on this new catalyst. Your analysts have come up with a plan. They've said, we expect this growth based on this, and you've gotten all the street research and everything. You come up with a plan of how you're going to, let's say, buy a stock. Let's say something had good news and you know you want to buy it. Either you're going to call your execution desk or you're going to do the execution yourself if you have an internal execution desk. What is the execution trader's job?
To make the trade. They're not trying to fight for
What is their
price.
job?
To fulfill the order that the person who called them told them to fulfill.
Why would anybody hire? Why would someone be a better execution trader than somebody else then?
Because they're able to more frequently fulfill the orders in the time frame that they're being asked to. And
close. That's good, but I'll kind of talk about it from a different perspective. They can more efficiently do it.
In the fighting for price?
Fighting for price,
Okay.
right? They can get better prices on average. They can beat just buying, just buy. right? So like if you can buy passively, and we talk about that, right? Real order flow, huge money order flow. Typically it's not aggressive.
Where they're not just taking the offers.
They'll just sit on the bid as long as they possibly can, unless they have a distinct reason to, I need to be out by noon, right? If somebody calls an execution desk, I need you to call me back at noon, tell me I'm done with this order. That's a different sort of order. We don't see that often. That's what makes the hitchhiker scalp such a powerful thing when you can identify it, because it's this unique order type that's being utilized. For the most part, our hypothesis would be that if somebody's saying, yeah, can you get me in over the next day or a couple days, what's that buying going to look like?
They're going to be orders, but they're going to be fighting for price more, right?
They're going to be
These
as passive as they
traders.
possibly can be, right? So that they can beat VWAP. If they're having to buy way above VWAP, they haven't beat any average participant, right?
Right.
If they can buy
what
it,
VWAP shows.
correct,
Right?
exactly. So if they can buy it as close to VWAP or even below VWAP, that's showing that they're a really efficient executor. Which, as an execution desk,
That's what you want.
that's what you need, right? That's what you're competing for, is to tell your clients, we can fulfill your orders more efficiently than anybody else.
Yeah, we can get you. Yeah, you called us and you wanted to buy this because it's currently trading at 45, and you think it's going to go to 50. But we actually were able to get you more shares at a lower average price.
Correct. We're not calling you back and saying we had to chase it at 48.
Right.
You want to sell it at 50 because we get paid no matter what. Like you're not going to be in business very long as an execution desk, right? Doesn't matter whose dad knows whose dad. You're not going to be in business very long because you're costing the clients a lot of money, right? Momentum trading. What is the intent of a momentum trader?
The intent of a momentum trader is to capture very short-term moves where basically lots of market participants are chasing the price higher or chasing the price lower.
Correct. So that would lead to a different style of trading, which is more what we've seen here. When you can't go in one direction, in this case you couldn't go lower, all of a sudden the momentum starts, and then it builds and it builds and it builds, and then it just ends. And what happens after it ends for the day?
Some sort of pullback typically, right?
And we just kind of chop around after that, right? And we've seen that. It can be really frustrating to trade into the close because there's just nothing going. But there's been one really good move almost every single day.
Right.
Today's a little bit of an exception so far, but like we said, we don't expect those participants in the market every day. We just want to have a plan to take advantage of them when they're there, right?
That makes a ton of sense.
Okay, so this sets the table for this trade. So let's get into this trade, and we can answer the question that you had, which is, how do you adjust your trading? Ultimately, the question is, how do you know when to adjust your trading plan? How do you know when to look for more, right?
How do you, in this trade, like, how do you see it fail at 109, but have some sort of understanding?
Which was your target, right?
Which was my target.
Correct.
Right. In my mind, I actually listened to what I was saying in the Discord call back this morning.
Oh, nice.
And I was like, oh, if it clears 109, it should go much higher.
Yeah.
I'm holding a lot there to see if it breaks the level. It fails, I'm flat.
Yep. Yeah. Which is 8 times out of 10, or maybe 6 times out of 10. No, I'm sorry. Let me flip that around. Let's say this. Maybe 1 time out of 8 or 1 time out of 6, because it's not out of 10. It's actually, it's more frequently than that. So let's say 1 out of 6 times. The right thing to do is the wrong thing to do.
Right.
And sometimes it's 1 out of 8, and sometimes it's probably 1 out of 20. But I would say on average, probably 1 out of 6, the right thing to do is the wrong thing to do. You did the right thing in that case, saying 109, that was my measured move target, that was my risk reward target, that was everything about this trade. That's the right thing to do. And you did the right thing. So there's nothing wrong with that. How many times have you taken this stuff, Scott?
A lot, actually.
More than 20?
Yes.
Okay. So now, so you need to look through this number that we're using on the desk to qualify edge is, have you taken a trade 20 times? Yep. If you've taken it 20 times and you recognize you have edge in this trade, that is statistically significant, right? So if you've taken it more than 20 times, that's where you can get into that. I can start to learn when to
to adjust my trade strategy.
Correct. Based on this 1 out of 6 or 1 out of 8. Each trade's going to have a different number likely, and markets will change. And we're not saying you change anything about the entry or the expected value on entry, right? You don't change your stop, you don't change your sizing, you don't do anything else, because if you're changing those variables, you're changing the entire dynamic of the trade. We're only talking about your reasons to sell. Once you have that 20 examples, then you can start to think, what's a different reason to sell in these unique situations? This is what we have, is a unique situation.
So what is the unique situation here?
Yeah, so it's kind of a unique combination and kind of a fun combination. So first of all, the reason why I don't think I scored you a 10 out of 10 on the technicals, and I'll tell you why. Do you have any idea how important the 107.5 level is in AMD, not just intraday?
I have it marked.
107.5.
Where is this? No, I don't. I guess I don't know.
Let's look over to the left. Look left.
Left.
On that same hourly chart, 15-minute chart that you had.
I can't scroll. This is a picture.
Okay, that's fine. Sorry, go back. Just put your cursor there. You can see. You can literally almost see it touched there. How did it respond?
Very, very sharp reaction.
Next time it touched almost the same area.
Right here.
Yep.
And then here
overnight it did that.
Yeah.
Yep. Next day.
Here it acts as huge support.
Yep. Next day.
Here touch, huge bounce.
Yep.
Okay.
So we gapped down below that level off of the news catalyst. Then we were trading above that level, right? What's occurring at that level?
Somebody's got orders there.
Somebody's
probably
buying it there every single time. So that's your first clue, is that this is a really important level. Let's go to the intraday chart. This is again, all of these little factors that tell you the right thing to do is not the right thing to do.
Right here.
It's right there.
Yeah.
Right? And so it's not the fact that it's right there. How did it trade into that level?
It had this very aggressive move down into it. It basically flushes in with this candle on high volume, stalls for a moment, pushes right into the level, and then trades very aggressive.
So you watch the scalp, the stuffs trade scalp, right? So you understand the dynamic, and we'll go into the story really quickly behind it. And it's like, when we were at our old office, we used to order food a lot, and we don't do it as much anymore. Well, mainly because we get pizza a lot, because the pizza's right here. But there was like, we weren't quite in the thick of everything, so it was easier to order from a lot of places. And there was one day when one of the traders, Boris, who runs our tech, is amazing, but he's also like, he was our resident foodie, and he's gone a little cleaner with his eating, as he'll tell you. But he was our resident foodie, and he would always help us find these really good places. And this guy, we ordered Cuban sandwiches once, and this guy ate too many Cuban sandwiches, and he was just kind of sitting at his desk. And this trader was amazing at taking a trade like we see here and literally trading that breakdown and then adding below the lows, and if it didn't work, he was stopped out, and if it did work, he'd make a ton of money, right? All of a sudden, it's the middle of the day. It wasn't 10 o'clock in the morning. It was after lunch. And he made a trade. It might have been an AMD even, but like, it was in something. And he just kind of called it out, and he goes, "Oh, it's down to support. I'm just going to buy it." And he said it like, so like, I remember the tone of his voice was like, "I just ate too much. Like, I don't even want to, like, I'm going to fall asleep half the time." And it surprised everyone on the desk that like, why is he going to buy into support? This guy makes
breakout trader.
he makes all his money shorting when it breaks down below support. And it was so weird, and he just kind of did it. And then it like popped up, and he's like, "Okay, I'll just sell it." And then it did it again, and he did it again. And I was like, what is going on with this guy? And he admitted later, he was like, I didn't want to short it and then take the rip. So I was like, fine, I'll just buy it. And he built that into his trading strategy, and he put specific variables around it. And then we've enhanced it as we've gone. But that little moment of just like, I just don't want to fight with this stock if it doesn't break down. And then he saw the bidder, and he was like, "Okay, I'll just buy it." Right? I know if I was short here, I would be covering 30 cents higher. So instead of being short here and covering 30 cents higher, I'm just going to buy it and take advantage of that 30 cents. So out of his like pure fatigue, maybe, or whatever it was, food coma. He did something that became very innovative for his trading, actually, and helped him a lot. That's the trade that we have here, is that stuffed trade. He was so stuffed that he did something different. It also happens to be what happens on the chart, and so that's why we call it the stuffed traders, or the stuffed trade, I guess. So what you see is this very distinct consolidation and very aggressive breakdown. Where does the breakdown go?
Right into that 750 level.
Huge level, right?
And when you see it on the 15-minute, it's so clear, right?
It's
just
so
like
clear.
huge bounce.
Correct.
So now
Every
I
single
see-
time, yeah. And even though it didn't do it earlier, we didn't have that big bounce, you layer in the other factors. So you have probably an 8 to an 8.5 out of 10 support level. You have a gap below it pre-market off of a news catalyst that could be a whole nother podcast talking about just that news catalyst. But that news catalyst was it real? Was it confirmed? Or was it just speculation?
I think I wasn't totally clear on what the deal was, but it seemed like it was real, but that they hadn't made the decision to do it yet.
Correct. So
Yeah.
in theory, it's more speculative or hypothetical. It's
Right.
not real, right?
Right. It's not, we've passed a law. You
Correct.
cannot send your chips to China anymore.
Correct. Nobody really knows what percentage it is. Analysts have a lot of opinions, but nobody really knows. So we were down below that level overnight, and then we didn't spend any time below that level intraday. So you have this move. First of all, the seller at 109 was ridiculous. I had no idea what they were doing there. I was long at 2 different times into 109, thinking he was going to break out. Had to kick it out each time. But then we had this moment of something different.
Mhm.
We had that really aggressive move down to 107.5.
Right.
And then the tape. You were watching the tape.
Yep.
What did you feel about the tape?
When it got down into 107.5,
Yeah.
I mean, it was clear people were just stepping back in. It goes down there, and that it's there's just bids. They're bids. The
Correct.
bids are the
If
bidders
you're
are back.
short going into there, what are you thinking?
Oh no.
Yes. Yeah. You're like, that's not right at all. Right. If I'm short, I'm going to be covering 50 cents higher pretty quick. Right. So that sets up that entire trade. That doesn't answer your question of how do you think about it longer term, but it's starting to, right?
It builds on it, right? Because you have the move down into this important level, and then this happens at 10:14.
Yep.
So then if we look at what the market was doing at 10:14, so when it moves down initially, early in the day, the market is probably on part of this leg
Yep.
down.
Yep.
And then when we get it at 10:14, we're just now starting to move into this upward trend. And
Yeah.
this trend is developing the entire time this trade's happening.
Correct.
So you were, I'm sure, looking at this and saying, I know 107.5 is a very important level. I know that historically when it's moved into this level, it has very sharp reactions off of it. It didn't earlier in the day, but we weren't with the market. Now the market's turning and it moved back into that level.
The
We
fact
should
that
expect a
everything
sharper
is
rejection.
turning. Yep. We should expect. This is the potential of something bigger. This is the potential of it being a stuffed entry and turning into something more.
Right.
This is that 1 out of 6 or 1 out of 8, right? It's not anything about AMD or the volume or anything like that. It's about looking at the context of the trade, which is why we have you do the playbooks, because this forces you to look at the entire context of what's occurring, which in building this trade specifically, you've taken this trade more than 20 times, you said.
Yes.
You probably haven't thought about it in all the dynamics that all occurred in this confluence at the same time.
Absolutely.
In this unique way.
I was doing some trade review. So I hit my 20 trades, I think, last week in it.
Okay.
And my results, I was in the green on it, but it was really because of some like ones that I had hit with big size that worked and went in my favor. And my win percentage was far below what the course says we should be shooting for. I think mine was 38, and so we're shooting for 60.
Yep.
So I was then kind of skimming through the trades and looking at, why are these failing? And part of it was some over trading where I'm taking it. But the two biggest factors for this trade was obvious, right?
Yep.
You got to have the market on your side.
Yep.
And the stronger the level, the better it works.
Correct. Exactly. Those are two things that will be the biggest contributing factors to you being below that 60%.
Yeah.
If you took trades that were in the direction of the market, and if you took trades where the level is very important, it's going to matter so much more. Yep. You're actually, I would be surprised if you can keep that quality high and your win rate is only at 60. Like that's how powerful that is. And that combination really comes into play. But then you get into the dynamics of the trade itself, which are the tape showed you that there was that turn. You had a spot to risk against, which was only 2 cents below the low. So you're really not risking that much.
No, we have very tight risk.
Yeah, really tight risk, right?
I didn't hit this with that much size. I'm not doing a ton to consider because I haven't shown edge. Like, I'm not trying to hit trades that I think are better with wildly different size because there's no data to back up
You haven't
the trades I
developed
think
which
are
ones
better.
are better. Yeah, exactly.
But I didn't hit this with as much size, but this is one of the better stuff scalp setups
That
I've seen.
Yeah, because you had all the contributing factors. So this is where you categorize this as this is better than others. Okay, I can be a little bit bigger.
Yeah.
You put that in the back of your mind so that as you start to scale the setup up, you recognize I can be 1.5 times, 2 times, 5 times bigger in this one.
You can get huge
You can get
in these
huge
trades
trades.
that work.
Yeah.
For my project, I've been doing some of the dynamic risk management stuff.
Yeah.
And working with, I built a little Python model to model a trading day, and it's very, in these trades where you have shown statistical edge, if you're in a trade and it works 60% of the time and you're getting 2 to 1 risk reward or better, you can risk half your stop on it and it not be irresponsible from a math perspective.
Correct.
Emotionally, it may be something else, but hey, from a math perspective, in trades where you have proven edge, you can go very, very, very big.
Yes, you can.
Yeah.
And that is why we ask you to prove your edge. And that's why we ask you to get those 20 trades. That's why we ask you to evaluate your trades as you go through to make sure that you're actually taking the trades that you intend to take in that sample of 20. And you answer the question, why is my win rate so much lower than the guidance for this?
Right. When it wicks up and then slowly pulls back from a 6 out of 10 level against the market, the trade doesn't work.
The trade is not going to work. You're exactly right. Yeah. And if you're taking that, you're like, why doesn't this trade work? Well, eventually you will learn and you'll rotate through the next phase. And that's kind of what you're getting to experience right now is this rotation out of like, why is this trade working? Or some of the time and not working other times to a totally different game, which is, oh, these are the variables that go into this trade working. These are the variables that I understand clearly. And I can even see in your mind, oh, this is how this trade really works. This is why it really works. Mm-hmm. And that gets you into the realm of now you can play the risk sizing game.
Right.
Which is you can recognize this is a trade that I can actually be way bigger in, even at that 2 to 1. And then there's another element to it, which is what we're covering here, which is now I know I don't really need to shoot for a 2 to 1. I actually want to change my reasons to sell because it's such a good setup.
Right.
So instead of it being a 2 to 1, it's more like so you were in from where?
I was in from, I believe, 107.63.
Okay, so amazing prices. Very good. Okay.
Maybe 107.70.
So you're risking like what, 20 cents?
Something like that.
20 cents. Yep. And I mean, you made way more than 2 to 1. But like even then you're like, why did I sell so early, right? And that's the thing. So I don't even know what the risk reward would have been had you held to, where did we talk about the target real time?
We were saying, I know you were saying if it clears 109, you thought it should flush up to 109.50 basically immediately. And then you were talking about up to 11.50, I think, as it was going on in the Discord.
Maybe, but where was our next stop on that?
On this move here.
So and this comes into the dynamics of what the trade is. So it was a gap down.
Right.
Into a 8 out of 10, 8.5 support
go back
level.
To even on the day.
Go back to green on the day.
You were talking
right?
about this.
So we were talking about it, I think, because it's a gap down on a theoretical catalyst in a sector that's been really strong or really weak.
Very hot.
Strongest sector around, right? What was happening with NVIDIA was going up at the same time, and NVIDIA was actually stronger than this until this move started, and then AMD caught up really quickly, right? But the entire idea was we closed near the top of the range, then we gapped down to the bottom of the range really, really quickly. We saw buying at the bottom of the range. Where could this go?
Mm-hmm. Back to the top.
Back to the top. Back to break even, the undisturbed price from before this catalyst. If buyers are stepping in and saying this catalyst
Doesn't matter.
Doesn't matter. Where's it going to go? It's going to go there, right? And that was like 110.50 or something like that. And so that's why that target existed. And then it has an outside shot of making it to 111 or 111.50 or something like that. But like that's how that thought process evolved. So it went from this is a scalp, which it was. That was just a scalp on entry, right? We never ever change our reason to enter. It's not like I'm buying it or you were buying it 107.60 or 107.70 saying, but I think it could actually get to 109, so I'm going to double the room I'm going to give it. No. We had this exact specific setup. The only thing that changed is as the price action responded the way it did, that's where we can say this is doing exactly what I want it to do. Everything about this trade is exactly right. The market dynamics right. The catalyst is right. The level was right. The price action off the lows was exactly right.
Absolutely.
All of this is telling me this is actually something that can go. So I'm going to go to my other reasons to sell. And if I'm wrong, I'm okay losing on this one.
So what reason to sell were you using here? Because I
was using the measured move target.
Okay.
So the measured move target was essentially, it was a combination of things. It was the measured move target, which was 109 to 107.5, right? So add a point and a half, 2.5 points a point and a half to 109.
Okay. So
110.5.
Yeah.
Where does that lead us to?
Right back to that undisturbed price, which we expect to be some sort of resistance. Maybe.
Correct. Yeah. We're like, it's a psychological level, right?
It's crazy how well these measured moves work.
Well, but that's the weird thing about it is when you get a confluence, then all of a sudden that becomes a more important level. And so that's how that target got developed. Was we were just looking at it and we're like, okay, it's 107.5 to 109. Okay, that's a point and a half. All right, if we add 109 or a point and a half to 109, that's 110.5. Oh, that happens to be where it closed yesterday. If we go, that's probably where it's going to go. Right? Because we're not the only traders in the world. Like,
right.
There are a lot of our participants who are
looking at this saying, oh, a measured move. Oh, the undisturbed price.
Correct. Exactly. Right. And so it becomes this like magnet almost. So that's how that target gets evolved. So that's how that reason to sell developed. And we're monitoring it the entire time, but like there wasn't any reason to sell at all. And we were actually looking for reasons to add. We were talking about if it comes back to 109 after it breaks, I want to be putting on a second chance scalp. If I would have gotten a really clean ABC continuation scalp, I would have taken that. If I would have gotten a pullback to the 21 at like 109.50 at the 21 EMA, and then it rebid the 9 EMA, kind of one of those dip and curls and goes, I probably would have tried to get bigger as well. The reality is this is a situation where you want to pull out every trade that you have to get long and hope that one of those others comes up so you can put more risk on.
Right.
Because your initial trade is doing exactly what it should do.
So in my mind, I viewed it as almost two phases of doing exactly what it should do.
Yep.
So we see the stuff. This is working exactly like we expect. We move up back into 109. Okay, all of this is moved exactly like we expect it to. When we saw the failure at 109 and this stuff off of it here.
Let's define failure. I never felt like that was a failure at 109.
Okay, interesting.
Because you saw some selling there, but what do you expect to happen there? It had been sold there really aggressively previously. What did you expect? Where did you expect it to pull back to there? Like, what sort of response did you expect from the 109 failure?
I thought something at least like this or like this pullback could be possible. So giving back, probably not the entire move, but a pullback to VWAP at least.
Okay, yeah. And what would you have done if you were still long and it pulled back to VWAP?
If I was still long and it pulled back to VWAP,
yeah,
probably look to see what happened when we got there.
Correct. If we start going sideways, what do you do?
I probably have some sort of shot clock to see if it'll bounce.
Yeah, you work out of the position if it doesn't. Yeah, if it doesn't start curling back up, you work out of the position. The trade's over. right? In this case specifically, what did it do at 109?
It touched it. It didn't even have, if we look on the tape, it didn't have that sharp rejection.
Correct.
It
felt
kind of
lethargic in the way it was
moved
going up and then kind of came back. It was almost like there was like an attempt up there, but it wasn't like previously buyers were just pushing, couldn't break 109. This one, it was like very timid at 109 almost. Like it went up there, but it was almost like buyers were like afraid to like push it above 109.
Right. Because that's maybe real. Maybe buyers literally were afraid. I was.
Yeah.
I mean,
you didn't want to hit it above 109. You didn't want to buy more above 109 right there. Yeah.
Right. I mean, if I was trading on a live account, I mean, my sell in this bar would have contributed to the pullback.
Correct.
Right? Like that's, and there are other traders who are hitting that too.
Exactly. There are a lot of other traders who are like, okay, it's trading 107.5 to 109. I'm going to exit 109.
Right.
They're not looking at what's happening in the bigger picture. So the only thing in my mind is I expect once it got to 109, I expected it to pull back. I just didn't know, and we just didn't know how it's going to pull back. And how it pulls back tells us the probability of that trade. Now, we do have to make a bet that this is one of those 1 out of 6 or 1 out of 8 times where taking the sale at 109 is not the right thing to do. And you kind of have to make that decision before it gets to 109 and come to peace with those terms, because otherwise if you're selling at 108.5, it's still a good trade, but you can't have any remorse that, I should have sold at 109, right? Yeah. If it fails really quickly, comes all the way back to 108, you know you're wrong and you have to work out of the position. You really can't have remorse for the decision that you made, because you know, just like putting on any trade, over time, you making this decision is a profitable decision. And this is an example where it turned out to be a very profitable decision to hold it.
Right.
There are going to be times when it's not.
Right.
You still have to come to terms with when it works, this is a really, really good trade.
Yeah, that's why I like the playbook setup so much and the scalping course, because I feel like it's like once you understand the setup, you don't have to have these emotional regrets. Like if you know my system is I do this and you do exactly what you're supposed to do and it goes against you or you miss the move, either one of those two situations. Oh, well.
Yeah.
I did.
It's a part of trading.
I came into work today and did my job.
It's the same. You said it very well. I came into work today and I did my job. My job is to make the best decision at that time with the information that I have. I'd like to think my job is to make money. I think my kids think my job is to make money. But like the reality is my job is to make the best decision with the information that's presented to me.
Right.
And there are times that the information presented to us doesn't work. And there are times that it works way better than we expected. That's just the outcome of trading.
Yeah.
But if you make really high quality decisions with the information you have in the long term, it should work out very, very, very well.
If you're trading with Edge.
Yes, if you're trading with Edge. Yep.
If you're trading with Edge, your edge will be realized because your edge is so big. That's the beautiful part of trading.
It's like really finite. Like that's the funniest thing. It feels huge, and then you look at the grand scope of the market and everything that's traded, and it's like this little teeny tiny edge that exists within the whole freaking market. But once you understand it and you latch onto it, it feels so big.
Yeah. I mean, the trades, the risk reward that trading provides you is immense.
It can be, yeah.
I mean, there are very few places where you just get to place a bet where you win 60% of the time and can get 2-1 or better.
I mean, there's a skill involved, and we're not trying to say it's that easy, but that is the reality. When you define the environment appropriately, you can walk into those situations more often than you're even surprised sometimes with how. I was actually surprised with how clean this was, and almost a little sad with how clean this was up to there, because
back to 109.
We all wanted it to pull back, right? So this is a really good example to look at and go, wow, that was a really great trade. But the reality is, like, every part of me wanted it to pull back because I wanted more. I wanted to put on another trade because it was doing what. And so there's that part that's like, I didn't want to just get more size to get more size. We weren't fighting to get more size because we didn't have a setup or a reason to get more size.
Right, and you need the setups because that's how you control your risk.
That's how you control your risk, exactly. Yep.
Like even if you're looking at the stock, you're like, somebody's buying this. I think it's going to go to, 1050.
Yep.
If you get in without a setup and you're wrong, you don't have that same risk control. Whereas like I get in here with my setup and I know I'm risking 20 cents.
Correct. Yep. So, and that definition allows for you to have that expected value equation in the back of your mind. So, okay. Anything else you want to cover on this? I mean, I really appreciate you putting this together. I know you asked that question that you wrote, you know, why was there a reason to look for more? And I told you you had to do a playbook, and I thought your playbook was good. Any questions that you have with regard to this?
I think just to make sure I'm understanding what the difference in our thought processes was.
Yep.
So my expectation was that if it was going to go through 109 off this move, it would go through cleanly. But you expected it to pull back.
I didn't have the same expectation.
Right.
I didn't care. I expected it to, if it went through 109 cleanly, that's fine. If it doesn't go through 109 cleanly, I have so many other checks in my favor that if I have to give it to 108 and a half, if it would have dropped really aggressively to 108 and a half and then not rebid,
that would be a reason to sell.
That would be a reason to sell, right? If it would have, you know, kind of tried twice and then failed, that would have been a reason to sell. I'm trying to think about it. If it went down, shot clock went off, that would be a reason to sell. And I would have been, you know, I would have been like, man, that could have been really good. But then I would have just gone on to do something else on the day and probably evolved to what the next was. So I think I dropped the expectation and the thought that 109, I needed to be out into 109. It was just that this is a unique enough situation to know that not only should this go to 109, but if I get an appropriate pullback, this should go well above that, that's not the way I trade most of the time. Like I said, this is probably 1 out of 6 or 1 out of 8 trades. I'll be thinking, oh, there are enough checks in my favor that I really could look for more.
Right. And it's the combination of the strength of the 107.5.
Yep.
The kind of, we were talking in the Discord while this is happening about the tidal wave pattern here. It's
Yeah.
not perfect because of the chop.
Yep. The chop, the fact that it responded well to that area's resistance, but it kept going back up to that area's resistance. But the biggest contributing factor was the market,
right,
and the understanding of the dynamic of what we believe to potentially be occurring in the market, what participants we think are trading right now. And it's these momentum players that are trading on a much bigger scale than we are that are driving the entire market directionally for hours. And if we recognize that, it's like, if I know that somebody writes in their DRC, they're like, there's a quote from an old trader or something like that, and he's like, if you take the train from, you know, he's an old trader because he's talking about trains, but if you take the train from California to New York, you don't get off in Chicago. Right? Like,
right.
If you know the train is going to New York, you don't exit early, or if you think it's going to New York, you don't exit early. You just sit on the train and let it do its thing and know that you're going to go in that direction. And this is a situation where the bigger market is just that train, and the way things are trading is just that train, and you just don't overanalyze it. You just kind of know that this should be a different one.
Yeah, we have the volume check too. I'm just now.
We did have the volume check, but again, it's like, it's tough to put too much value into that because
it's like low R vol.
It was low R vol
volume all morning.
It was doing lower than expected volume all morning, and so the catalyst was very interesting. But you will run into this exact setup again. You'll have something that gaps down on a catalyst that could be viewed very negatively, but the price action is going to tell you how other participants are viewing it. You're going to have something trade right down into a really important support level, or maybe trade just below it and then right back above it. And then you're going to have the market start to pick up, and you're going to remember this next time. You're going to see this exact situation, and you're going to be like, okay, this is the time where it's not right to do the right thing.
Yeah, because there are more checks in our favor than there are the
Correct.
average time we take this trade.
Correct. And the checks in our favor are all these elements that we have you do in the playbook. So anyway, I think that's good for today.